Greetings from the future of transportation, where electric cars are redefining how we move about on the roadways. Visionary entrepreneur Gary offers some audacious predictions for the future, with Tesla leading the way. Get ready for an incredible adventure as we explore Gary's secret plan to make unthinkable profits in the next 7 years and profit from the 54 million electric cars that Tesla will sell by 2030. Prepare to be amazed by the technology that has the capacity to change the game and its thrilling growth rates and astounding projections. It's time to fasten your seatbelt and come along for this thrilling journey into the future. Please hit the like and subscribe buttons before we begin. Now that we have cleared that up, let's begin the conversation. Let's first learn a little bit about Gary and why his opinions about Tesla are important to us. Renowned investor and former CEO of Aegon Asset Management, Gary Black, is well known for his proficiency in finance and investment management. At a number of significant financial firms, including Goldman Sachs, Credit Suisse First Boston, and Janus Capital Group, he has had executive roles. What does he think of Tesla, then? Gary thinks that by 2030, Tesla will achieve amazing numbers. Therefore, now is a good opportunity to examine his covert plan. The business projects that by 2030, there will be 3 times as many Teslas shipped annually as there are at present. From its current 3.4% in 2022 to 6.6% in 2023, and then to 10% by the end of 2024, 16% in 2025, 20% in 2026, and so forth until it reaches 60% in 2030, is how Gary sees the adoption of EVs rising. Based on his forecasts, there will be up to 54 million electric vehicles on the road worldwide by 2030, or a multiple of 60 EVs in use worldwide. His projections are conservative because of his exclusive focus on Tesla's vehicle production, but his astonishing 47% annual growth rate is still projected by him. As you may have noticed, his stock price peaked at $1,050 in 2022, and his PE ranged from 61.2 in 2022 to 64 in 2030. I wish to repeat here the reasons Gary deserves our careful attention. A prominent achievement of Gary Black in the banking industry was his effective management of Janus Capital Group, where he was CEO from 2006 to 2009 and significantly increased performance. Apart from his career in banking, Gary Black is a well-known analyst on economic and financial matters, having shared his thoughts on CNBC and Bloomberg TV, among other platforms. The man is an expert in his field. In 2030, if Tesla's EPS is $42 and the stock price is $1,050, as Gary anticipates, the price-to-earnings ratio, PE, would be 6.4. Additionally, he projects exceptional yearly growth rates of 45% for deliveries and 44% for EV adoption. His forecast that Tesla's account will increase by 14% from 3.1 billion to around 3.6 billion by 2023 is one item that truly defies logic. It's absurd. If Tesla still needed to dilute in 2030 after generating net profits of more than $200 billion, it would be absurd. You want to reduce certain buybacks if your annual investment goal is $200 billion. In 2030, at the same $1,050 price per share, inflation raises the market capitalization to about $4 trillion. 2023 will be a comparable year. Black believes that Tesla's stock price will shortly approach $550. In contrast to the current market cap of $600 billion, a 69 PE has a market capitalization of nearly $2 trillion if we reach $552 per share. Gary Black estimates that in the upcoming 6 to 12 months, the company may hit his price target of 69 PE in 2023. That makes sense on paper, but let's speak about stock prices in 2024 instead. $616.69, or $600 per share, would be the equivalent of a 60 PE. Considering that Tesla will only be producing cars by 2025, a market valuation of $2.5 trillion, and a net income of $45 billion are both realistic targets. The PE would drastically decline if they were making so much money and shattering earnings after a year. Take into account the fact that in 2026, their income rose from $46 billion to $66 billion, a $20 billion gain. The company's market capitalization will be around $3 trillion at a 45 PE. I get a price per share of $832 by using a PE of 40. Yes, that particular 4x4 car is semi-automatic. That is absurd, and once more, it is illogical to divide a 25 PE by 23 for Tesla. But we're being cautious because you folks know who I am. Keep in mind that Gary's forecast solely takes into account the Tesla auto industry. What happens if we include Tesla FSD's genuine valuation proposition together with those of Tesla Insurance, Energy, and so forth? It goes without saying that the price increases dramatically. We'll discuss that in a moment. Let's start by discussing who shares Gary's belief that Tesla is a bull market. Being one of the biggest investors in Tesla, Cathie Wood and her investment firm ARK Invest have remained positive on the company along with Gary. Wood has been an outspoken advocate for Tesla and Elon Musk, the company's CEO, frequently pointing out the potential for the business to upend a number of sectors, including transportation, energy, and autonomous driving. However, in the past, Elon Musk, the CEO of Tesla, has drawn criticism from Charlie Munger, the vice chairman of Berkshire Hathaway and a close business associate of Warren Buffett. Munger chastised Tesla's excessive value and labeled Musk as asinine. During her speech at the annual Berkshire Hathaway shareholder meeting in May 2021, Munger was questioned regarding Tesla. I have the reputation of being an old fuddy-duddy, but if I, an old fuddy-duddy, can see it, someone else is buying Tesla at these prices, he remarked. It's rather insane, in my opinion. The reliance of Tesla on government incentives and subsidies has also drawn criticism from Munger, who stated, I think Elon Musk deserves credit. He's a clever man, but I don't think the automobile business is easy, and I think Tesla has some natural limits on how fast it can grow, even with government help. It's possible that other investors feel differently about Tesla. Similar to every stock, there are various opinions and viewpoints. While some might consider Tesla to be hazardous or overpriced, others might view it as a solid long-term investment prospect. It is imperative for investors to conduct independent research and make well-informed decisions that align with their investing objectives and risk tolerance. It's now time to add some FSD forecasts to Gary's prediction and see what occurs. This is something I'm looking forward to. The average cost to you in 2022 will be $12,500 due to the rising expense of FSD. They really increased the cost to $15,000. Many bears believe that FSD won't even be worth $29,000 by 2030. In 2020, the cost of purchasing FSD would be $8,000. The original sum of $6,000 has been raised to an incredible $15,000. I predict a four-fold increase from current levels by the end of the decade. Drawing from past patterns, we may predict that by 2022, the FSD profit margin will surpass $1.2 billion as sales rise by 2% annually from their current level of about $2.5 billion. An additional $2 billion will be added, bringing net income to $15 billion at a PE of 61 or $303 a share. The price per share has an intriguing range of $632 to $729. By 2030, the stock price will be $12.82, and the market value of the corporation would be around $6 trillion. Cars are now worth $20.30 each share, up from $10.50 before FSD was included. That means that cars will now be worth $230 more. That is really, really fantastic. This area is going to get utterly out of control in a matter of minutes. By 2030, if the stock price is accurate, you will have made an absurd 500% profit. My whole investment portfolio is in Tesla shares. Yesterday and today, I purchased so many Tesla shares that I now have to sell the moon to cover the cost. I wonder how well this will stand up in the long run. I don't know about you, but I have a positive vibe. Regarding the direction of Tesla stock in the upcoming year, investors are unsure. Tesla has always been a high performing stock despite this uncertainty, especially during its spectacular rise from mid 2019 to late 2021. The stock fell to a bear market low of $101.84 in early January, but it has since increased by almost 93%. Musk's upbeat forecast for 2023 helped the stock rise, even though Tesla posted mixed results for the fourth quarter of the previous year, with higher than expected earnings but lower than expected revenue. Never assume anything about Musk. Do you concur with Gary Black's evaluation? Does that make sense? Please hit the like and subscribe buttons if you like the video. I'll see you in the next one.